What's up, everybody? Mr. Zero to Infinity says hello for episode 52. If you're new to the channel, I've been documenting the journey of growing one of my stock portfolios from zero to infinity since there's no limit to how high my stock portfolio will go. If you are growing your own stock portfolio to infinity as fast as possible like me, then make sure to subscribe. Let's smash that like button to infinity. There's plenty of room on the rocket ship since we all have our own unique strategies to building wealth in the stock market. So we just moved our calendars to a new month. It's now July 2020 and it's time to figure out which growth stocks I'll be buying right now. I've been investing for 10 plus years now, and I'm a believer of having skin in the game when it comes to these types of videos. You see the stock portfolio on your screen. Up to this point in the Zero to Infinity episode series, I've been building my positions in 7 growth stocks starting from zero. For this video, I wanted to highlight 3 growth stocks that I plan to buy in July 2020. Before we get into my list, let's go over a little background about my investing strategy. Quick disclaimer, all my episodes are for entertainment purposes only. I'm not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. I'm just showing you what I'm doing with one of my stock portfolios. Always do your own research prior to making any investments since you have your own unique way of multiplying your own portfolio. So back to my investment strategy, I am always on the hunt for finding the latest trends to build wealth in the stock market. When a trend starts to take off, you could see that certain stocks begin to go up in price. You could clearly see that with my Fiverr International stock position. Everyone starts a stock portfolio at zero and then buys their first stock. It turns out that my best performing stock at the time I took this screenshot is Fiverr stock. I identified a trend in the freelance industry earlier in the year. My thoughts, opinions, and commentary on that trend have been documented in many of my earlier episodes when I started this channel. As you can see, that particular stock holding is up over 155%, which is the type of return I look to achieve in all of my stocks over a long period of time. Between me and you, I like to swing for home runs. I recognize the trend, found a real company, and now there's a real result on your screen. Will that return change as time moves on? Of course. I like to block the day-to-day stock market noise and profit from trends that I'm confident will turn an undervalued stock into a profitable investment. It's important to remember that the stock market doesn't reflect the present economy. I try my best to actively predict the future backed by data and a strong bull thesis for any of my top growth stocks that I've been buying in 2020. I've been constantly adding cash to the portfolio as the weeks move forward, constantly dollar cost averaging all of my holdings. We all have our own monthly cash flow number. I have big plans to level up the portfolio as we continue with these videos. My goal is to grow and expand upon my investments with every new buy order that I place. Since the portfolio is beginning to develop over time, it is my job as an individual portfolio manager managing my own money to continue to find businesses that will level up the returns as time goes by. So which 3 growth stocks do I plan to buy in July 2020? Let's start it off with one of my newest stocks, Shift4 Payments. I'm going to pass along a few of my personal notes from my research. As I discuss my notes, hopefully this will help you get an inside look of the trends that I'm seeing right now to go along with the trends that you may be seeing. As you all know, every stock is backed by a company and management team. I watched a ton of videos about the CEO and founder, Jared Isaacman. He has a very unique story of growing the business since 1999 at 16 years old. He has a really cool story of growing the company, and he also has an interesting hobby in flying fighter jets. If you've been following the episodes, you know that researching the CEO and management team of any company I invest in is a very important piece to my bull thesis. After watching hours of interviews found online, I believe Jared is a leader that knows his numbers and is on a mission to grow the company for a long time. In my opinion, Shift4 Payments is an under-the-radar stock since it recently IPO'd not too long ago. It's a company that is a full end-to-end technology platform that processes payments for the hospitality industry and leisure-related businesses like hotels, resorts, and restaurants. What caught my attention is the amount of known brands already using Shift4 Payments. There are a ton. Over 200,000 businesses. A few names in my notes are Hilton, Denny's, PGA Tour, Wendy's, Cheesecake Factory, Dave & Buster's, Pebble Beach Golf Resorts, Dairy Queen, Popeyes, Outback, KFC, Cold Stone, Little Caesars, Applebee's, Arby's. I could go on and on. Have you heard of these? Click that like button if you have. The list is extensive. These brands are a major driver to my bull thesis. Think about it. If you created and started a company from scratch, how difficult do you think it is to get in the door to sell your product to one major brand, let alone hundreds of brands? Once you get the ball rolling, I think a sales pitch gets easier and easier when you have a list of satisfied customers already using your product. This is a clear competitive advantage in my opinion. Having a big client base already may open the doors to many other industries outside of the hospitality sector. When it comes to business, once you acquire a customer in your ecosystem, you want to keep them using your product or service forever. This is why I added Apple stock to my portfolio earlier in the year. People are loyal to the iPhone and other Apple products for a reason. They love the products, and some customers will never switch brands and stay in the brand ecosystem forever. Jared has stated that no one customer makes up more than 1% of the payment volume using Shift4 Payments, which I personally like to see. Shift4 Payments connects payment processing services to its software. The company makes money in primarily two ways. The first way is through fees paid by merchants, also known as processing fees. The second way, through licensed subscriptions to software and other technology offers. Since there are high switching costs and multi-year contracts, Jared has said that revenue is recurring in nature, which is another thing I really like about the company. I'm not going into too much detail about the financials since that would take me a very long time to break down numbers fully. Revenues, gross income, net income, taxes, and so on. You could do your own research by going to the Shift4 Payments Investor Relations page. The one key metric that I'm focusing on is the revenues numbers when it comes to a fast-growing software company like Shift4 Payments. The total revenue in 2019 was over $700 billion. Pretty impressive for a kid that started the business in his basement at 16 years old. Not too long ago, QR Pay was announced in a recent update to help businesses facilitate contactless payments, which is a long-term trend that I'm seeing right now. We are in a race to get customers in your business's ecosystem now. If you miss this opportunity now, I think you will be left behind as a company and get disrupted. I don't believe a lot of institutional investors understand the long-term value of acquiring customers today. These tech companies are becoming data machines. You'd be amazed how valuable payment data can be for a company like Shift4 Payments. The cheaper the shares I could get of 4 stock, the better, since I'm just starting to build up my position at this time. And this leads me to my next growth stock I'll be buying in July 2020, Square stock. Click that like button if you're still following along. If you're like me, you may think Square is a big competitor to Shift4 Payments with a lot more resources, and you may be right. This is why I also plan to buy more Square stock. Right now, my Square stock holding is up 36% at the time I took this screenshot. When it comes to managing a stock portfolio, I have to make decisions on which holdings I want to add to and how many stocks I want in the portfolio for diversification purposes. With Square trading over $100 at this time, I personally feel that the momentum is just getting started. I've covered Square stock and the CEO Jack Dorsey extensively in an earlier episode back when I started my small position. I do believe Square is following the business model of Shift4 Payments very closely. Square focuses on small businesses, helping millions of sellers run their business from secure credit card processing to point-of-sale solutions. I've already discussed my bull thesis on the Cash App platform, which I believe is disrupting the mobile payment world. The Cash App is another data collector in the payment processing industry for consumers. I feel that we're moving in the direction of digital wallets, and the Cash App brand will continue to gain market share long term. The big question for everyone living on this planet is, where do you want your cash sitting? Right now, I believe we are in a race of acquiring brand loyalty in the early stages of new fintechs. I think more and more people are trusting mobile apps, even if it's the younger generation that's leading the charge. Things are changing, and I'm seeing a trend of people not wanting to walk into banks. I think doing things remotely is the in thing right now, and I think that logic will stick long term. I think the learning curve for online banking is accelerating, and more people don't like minimum balance requirements. Today, people like free services. Traders and investors like $0 trading fees. By having minimum balance requirements, banks are losing market share to individuals that may have a lot more money in the future compared to today. I think Cash App is making a smart decision by reducing the barriers to use the platform and get a debit card in a simplified way. I think Square is building a customer ecosystem that could potentially stay loyal to the brand for many years to come, and I think Square will be in a position to upsell new services and products down the road. Sure, at over $100 per share, when I buy more SQ stock, I know I'm buying future value versus today's value. Square is a clear growth stock with downside risk, especially trading at all-time highs, but I feel a lot of people may miss one of the best buying opportunities in one of the best fintechs of our generation that has a lot of room to grow. There are a ton of things I like about Square, but I'll limit my thoughts there. Last and not least, the third growth stock I plan to buy in July 2020 is Costco stock. In my opinion, Costco is more of a defensive growth stock, and it's also a dividend stock. I say defensive stock because Costco provides products that people simply can't live without. My bull thesis on Costco is the belief that a lot of people rely on major retailers like Costco, Walmart, Amazon, and other grocery stores for food and supplies. I know that people need to eat food every day. Outside of your local grocery store and bigger retail stores like Walmart and Target, Costco has a unique business model. It has a subscription model, which means a recurring revenue source with a very high retention rate year over year. For any company, sales revenues will fluctuate month to month. For Costco, they have a subscription revenue coming in that's a predictable revenue stream. I think CEO Craig Jelinek is a humble guy. He's running a company that focuses on the Costco experience every time a customer walks into their local retail store. I've watched a ton of interviews online, and it's awesome to read so many great things in the comment sections about the company. I could tell employees sure do like working for Costco. Costco has been pricing out smaller competitors with its unique business model of selling valuable products at an affordable price. I know many people like low and fair prices. I think Costco is a wholesale juggernaut and is a forever stock to get the best deals around town. Costco may have been late to the e-commerce and online shopping party, but I think there's a ton of growth potential in that revenue category since more and more people prefer convenience nowadays. Delivery and online ordering is a long-term trend I'm seeing, especially in the grocery department. I know that Costco isn't a margin company, it's a volume company, meaning customers need to buy in bulk. For example, you're not just buying one pack of gum, you're buying multiple packs of gum. I think a lot of people like the Kirkland brand of products, which is Costco's private brand. I think Costco's word-of-mouth marketing strategy is on another level. Why do you think Elon Musk and Tesla have a word-of-mouth marketing philosophy? As more people see a Tesla on the road, take a test drive, or talk with a Tesla owner, more demand is created for Tesla. This is comparable to the Costco experience. There are many people that rave about Costco's product line and cheap hot dogs found in the food court. Click the like button if you had one of those hot dogs before. Costco is a company that could rely on word of mouth to drive subscriptions and sales. My main bull thesis surrounds the untapped potential of Costco's website with online sales, the worldwide membership growth potential as more and more Costcos are built globally, and I just think Costco is a best-of-breed retail stock. I think small local competitors won't be able to compete with Costco's pricing long term. I actually like the fact that Costco stock is sometimes labeled as a boring company with no hype. Big dips are rare, so anytime I could get an opportunity to buy cheaper shares, I'll be loading up. Costco is one of 3 dividend stocks in my portfolio, including Apple and Starbucks. My strategy focuses on growth stocks, and if they pay a dividend, that's always a plus. So there you go. Some of my personal thoughts and opinions about 3 growth stocks that I'll be looking to buy in July 2020. Each stock has its own unique downside risk. I do believe with any stock portfolio, it's important to hold bigger cap stocks that I believe have less downside risk with healthy balance sheets compared to small cap stocks that can go bankrupt. For example, Apple, Starbucks, and Costco are large cap stocks in the high billions looking at the market cap metric. These types of stocks may indeed have limited upside compared to smaller cap stocks under $5 billion like Fiverr, Penn National Gaming, and Shift4 Payments. Lots of people think it's much easier for a $5 billion stock to shoot to $100 billion versus a $1 trillion stock to double to $2 trillion. Sometimes that's not always the case, and there's a risk-reward aspect to portfolio construction and management that I have to think about. To make sure I meet my own unique performance goals, I personally feel it's very important to allocate a percentage of a portfolio to stocks I believe have less downside risk in the event there's another stock market crash or correction in 2020. I'm glad to give you the inside scoop of my 0 to infinity portfolio. Remember, I only hit on the things I like about each of these 3 stocks. There's always a bear case for any bull case, so keep that in mind when you're doing your own research. Let's end it there. Play the music. Maybe I didn't earn your subscription with this episode, but there's always next episode. It's free to subscribe, and one of my favorite comments from last episode is on your screen. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios from 0 to infinity. All my episodes are meant to be watched in order since the stock market is always changing and there are always new trends to be found as the weeks tick forward. Instagram is Mr. 0 to infinity. Thanks again for watching. Let's keep building from 0 to infinity. You got this. Always remember, this video is for entertainment purposes only. I'm not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. All ideas and opinions presented in this episode are mine and mine alone. You should never take any of this information as guidance for buying or selling any type of investment or security. Do your own research prior to making any investments. Do not assume any facts and numbers in this video are accurate. Read the disclaimer on your screen fully. Peace.